Welcome. I want to show you how to find perfect entries in the Forex market. So I'll be giving you ideas of how I find perfect entries in the Forex market. So let's just get to it. The first thing that you have to do is that you have to follow the trend of a higher time frame. You can follow the trend of the 4-hour time frame. You can follow the trend of the daily time frame, but bottom line is you have to follow the trend of a higher time frame. The second thing that you have to do is to determine whether you want to buy or sell from the higher time frame. Let me show you this. Let's say for your strategy to take a sell, you observe, let's say maybe the third touch. So first touch, second touch, third touch, and then you take a sell right at this point. Or for you to buy, you observe the third touch, first touch, second touch, and then third touch right here, 3 rising valleys, you buy right here. Okay, whatever your strategy may be. For some, if you are using a candlestick pattern, let's say you take an entry once you have seen a bullish engulfing candle. Let's say this is red or black, and then this one is white or green. So once you see this candlestick pattern, you buy. Okay, let's say those are your strategies. Now you have to see your strategy set up from the higher time frame. It can be the 4-hour or the daily. Okay, so you have to see your pattern from a higher time frame. All right, remember the first point, you have to follow the trend of a higher time frame. So while following the trend, you can see that it is an uptrend, but then on the uptrend you are seeing, if you are trading the third touch, you are seeing the third touch. So you might think this is the time to sell, and this is not, because it's an uptrend. So on an uptrend, what you want is to buy. So based on your strategy, you follow decide on whether you want to buy or sell based on the higher time frame. Okay, that was the second thing. For the third thing, determine your entry point on a smaller time frame. Okay, which means once you have done this, you have to go to a smaller time frame. The basic smaller time frame is the 15-minute time frame. Once you are on the 15-minute time frame, you look for the right entry point. For example, right here, you can enter and then you can place your stop loss somewhere right here or somewhere right here, depending on your risk to reward ratios or whatever you observe for your stop loss. But then the point is that determine your stop loss from a smaller time frame, and your take profit, you can use the higher time frame for the take profit. After placing the stop loss, which is the red line, you come to the higher time frame and you check where you can place your take profit, and clearly it is anywhere around this point. Okay, so that you know if price just keeps going and you are trailing your stop loss, you know the maximum point where you should stop. The point is that you place your stop loss from the smaller time frame and you take profit from the bigger time frames. That is what is going to give you a high reward ratio. Another tip, that one is not based on how to find perfect entries. After taking the trades, I took the trades right here using the same principle and it's already in profit. After taking the trades, my target on such an account would be something like $50. Anything around $50, I'd be good to go. So if I was trading this, I would have had multiple trades after being sure that price was going to make a small move in the upward direction. So once I've taken the trades, right now I would be closing half of the trades. So right here I can close 2 trades and leave the 2 to continue running. These 2 are to make sure, or to ensure, that if price can happen to come and hit the stop loss, it doesn't reduce my balance, because I already have profits to cushion my running trades. So please make it a habit to take partial profits and then you leave some of the trades to run. Because what usually happens is that after taking trades, price, let's say you took a buy right here, price is likely to spike in your direction before it can pull back and even hit your stop loss. So with this small move, you have to make sure that you are covered. You are covered. And the last thing that I can say, even though I mentioned it, having targets is very important. This is my other account. So with this account, once I have a profit of around $100, close to $200, no matter the running trades, whether they are promising or not, I close everything and I stay out of the market for the day until I see it on the following day. Because anything can happen in the market, just anything can happen. So once you have those profits, don't try to be the master and hold so that you have huge profits. Take your target and leave it for the day. It's like that. I know I took these trades with several people in the group, but some might decide to hold till the end. But for me, once I reach my target, I close everything and then I get out. It's just like that. I hope you get something from these few tips that I have shared, but basically those are the things that I use when I trade, and those are the things that work for me. May I end here for today. See you in my next video. Hello, this is me trading. Sorry for the voice. I've got flu, changing of seasons. You know, if you are still new in Forex and you are still learning to trade, it's advised that you risk 1 to 2% of your account. But if you are trading to make money, it's not so. Or let me say, after learning how to trade, things change. A small lot size doesn't get you anywhere, and a single trade doesn't get you anywhere.